call the meeting to order. Roll call, please.
John Righeimer.
Here.
Stacy Hessel. Mark Helwig. Tom Duffy. Jeff Haney. You have a quorum.
Excellent, thank you. Pledge of allegiance.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Please read the certification of compliance with open law.
This meeting was noticed to the media and public as required by Section 19.84 of the Wisconsin statutes.
Thank you. The meeting agenda is set. Do we have any public comments? No. Consider approval of the minutes from the previous meeting. Motion, Mark Helwig.
I'll second.
Second, Jeff Haney. Any discussion? All those in favor?
Aye.
Any opposed? Minutes passed. Okay, number 9, Brian, Treasurer's Report.
Good morning, everyone. We started out the 2026 interim update, started out with 104 properties. We're now down to 78, so that keeps dwindling. The 2023 spring publication list was set. These are for the 2023 delinquent start of the whole interim process. 211 parcels were published in the paper. Verified that yesterday. We started work, tax collections for 2025 tax rolls. It says here we started work on the settlements. They are now all complete, and we're receiving checks from the municipalities already. Sawyer County received 2,743,139.52. That was our January settlements amount. That was received in January. As we sit right now, the total delinquent real estate, $324,983.62. And with including interest and penalties that are out there, that jumps up to $373,730.96.
Brian, how does that compare? Is that what it usually is, or how does that compare to previous?
Last year, as far as the total, like we collected, or are you talking about the delinquent?
The delinquency.
It's getting better. I think it's better than it was last year. I don't think we had, I think we collected more this February, the municipalities. They were pretty close, and I can't tell you if there was more actual properties that we collected or the amount is higher. The amount is higher this year for sure. That I know. Any other questions? Thank you.
Brian, Finance Department report.
Okay, good morning, everybody. Starting with sales tax. So our first distribution for 2026 is here. Just over 200,000, less than last year, but certainly more than all previous years. So not a bad way to start 26. Looking at it reflective of last November activity, it probably is right around where it should be. If there are no questions on that, we can.
Question on
Yes, go ahead.
sales tax, maybe for Mike. Do we, like that's a main, or one of the ways we make revenue, right? Property taxes and this. How much, like, the more sales tax, in theory, we could lower the tax burden on citizens, yes? I mean, if there was but how much more would it have to expand for it to make even a dent?
It would have to have more of a significant expansion, because right now our expenses increase, probably 4% a year. Our net new construction is usually only 1.2% or so, 1.4. So there's always a gap.
3%
So this,
gap.
any growth here really helps us fill.
That would fill
the
that
structural-
3%?
Yep,
Okay,
yeah. So we would have to, get a 25% increase to
Okay.
really affect
okay,
how we fund things.
thank you.
Okay, if there are no other questions, we can move on to the budget performance report this is for year ending '25. And so we're working on closing out the year. You'll see there's going to be fluctuations the next couple of months. And you'll notice here when we look at our net income or where we're finishing for the year, there's a difference from last month's report. And it's just because we're continuing to see revenues and expenses come in for '25, and so we're constantly booking those back, right? And so there's going to be some fluctuations. When we get kind of towards the end of February, most of the expenditures for 2025 are here, so that kind of lets up. But revenues continue to come in into April, and so there'll still be some shifts and some differences. But right now, revenue's finishing at 107% of budget, and so ahead of what we projected. And expenses are at 98% of budget, so still under 100% of where we forecasted to be. Finishing just shy of 1.5 million ahead so far for the year. So it's safe to say we'll be making a contribution into fund balance. We just don't know exactly what those numbers are going to come out to yet. Health and Human Services. So a big part of January's work for me is focusing on Health and Human Services. They have some reporting that's due the beginning of February for the year. And so even though we'll continue to see some activity for them from '25 that will continue to move back, we need to capture as much as we can and get them as accurate as we can at the beginning of February so we can do some of those annual reports. And so a lot of the work has been done to the point that we can get, and that's where a lot of our focus is in January. They're showing a loss right now of $657,000. That will continue to change because, again, we will see some expenditures come through, but we'll also see some revenues. They have a gear settlement for some of their funding, and they have like a closeout period that is in June. So anything that wasn't captured or was missed or needs to be settled out will still come to us in June of '26, related back to '25, and it'll be posted back to '25. And so it's just important to note and acknowledge that we're going to continue to see some shifts and some changes in them for quite a while yet. And then highway, right now, they're showing a gain of $370,000. Things went well at highway this year, and they really worked hard. And being able to, every month, we accounted for their depreciation expenses and a few other things like that. Those are some big ticket items that used to hit them hard at the end of the year. So this kind of gave us a way to help anticipate what they were going to look like on a month-to-month basis and kind of have a better handle on where they were sitting financially. Any questions?
I'll make a couple comments. Out of the general fund, we do have a couple that we have to put into assigned fund balance. Any sales tax overage, which there was an overage in sales tax from budget, so that will go right into that assigned fund balance. And then the other one is ambulance, anything we have there, and I think we're at about 48,000, something like that. That will have to go into their assigned fund balance, which reduces the tax levy in the next year. And then with HHS, we are anticipating having to do a transfer from the general fund there. Like Randy said, we have not closed out the books for HHS, but they will have a deficit, and even beyond the deficit, they've really had to spend down their own fund balance this year to virtually nothing. So we would like to build that up again for those.
Any idea of how much?
What's that?
Any idea of how much?
That we would be able to put over there? Well, if we have it, it would be nice to do about $1 million. 'Cause that
What are
would-
we gonna have to put over there?
What are we gonna have to? Well, right now, it's 657,000. So,
What's causing that deficit?
same old thing, the out-of-county placements are the biggest hit. We've beefed up our youth justice program. We're seeing results, but there's been quite an investment on the front end to get there. But the numbers are down, which is encouraging. I think from last year from '24 to '25, I believe we went from about 75 new cases down to 58. So the investment we're making is working, which we'll see the results hopefully down the road as those people become adults and hopefully aren't be coming out of county placements at that time. We have a really high-cost one that we're actually working to bring into Sawyer County, which would help a lot. So Julie's doing a great job brainstorming ideas to help with the budget, and, it's going to take time, because to save money down the road, you gotta invest now, so there's kind of a double cost now. But once we get through that, we're hoping that we're a little more streamlined. And with highway, kind of the same thing. We had been running a deficit. John's worked really hard, and he presented at Public Works last night about some more ideas he has to.
That's good ideas.
Yeah, we're overstocked in trucks, and we've used them inefficiently. At the end of the day, we oftentimes have to pay the state back because of underuse for those vehicles, so it's one thing he's working on. He's already kind of turned the corner a little bit, and he's very, very good at budgeting and costing out his construction plan, like almost down to the dollar a lot of the times. It comes into bid. His bid comes in right at what he had projected. So he's doing really, really well. And it's another one where we're probably gonna have to make some initial investment to get even more efficient. But then we're hoping down the road, highway becomes more self-sufficient, not relying on general fund, not relying as much on CIP or tax levy. So it's gonna take a little while to get there, but those two departments are, they're larger departments, and they've been costing us, but we're really making headway in both. And it fits into our goal of reducing our CIP issue in the future. Might mean some larger capital, but to reduce that. And we're looking at the cash flow and savings of doing some things versus what some debt repayment would be if we did it.
Is there money, besides their regular budget, is there money set aside for like a new building or anything? We had talked about that at one time.
Not yet, but that's one of the things
That's what you're
we're
working on,
starting
okay.
to work on. Yep.
Just touring that, it just seems like there could be more efficiencies with the building and I'm talking about any of the buildings. It seems like there should be more efficiencies, and so if we can look at that, that would be great.
Yeah, yep, and those are some of the things we're looking at, and what was the next thing? Oh, and then if we have, in the end, after making transfers, any money left over, I'd like to put some more into the Resource Development Fund. I know Jay Kozlowski has mentioned we have at least one bridge or dam that needs some repair. We don't know what is causing it yet. We need to wait a little bit for the thaw to diagnose it, but could be a spendy one. Hopefully it's not as spendy as we're anticipating, but one of the dams isn't releasing, and it's either over time the walls have caved in and impeded the movement, or it could be the mechanical system. Mechanical would be cheaper. Obviously, having to redo the sidewalls would be more expensive. So I'd like to get some more money into that, again, to keep need out of CIP wherever we can. There would be a grant, but it's a 50-50 grant. So we would have to come up with half of the cost. It's better coming up with all of it, yeah.
Okay, good discussion. Any other questions, comments? If not, we'll move on. Looking at January of '26, not a whole lot to look at. It's just kind of our first glance at how the year is starting out. You will notice that revenues are behind expenses, and we have some things that we have to pay out in January. And so January often will look a little lopsided. Comparing to last year, we are showing less of a deficit in January, so that's positive. We want to see maybe about 8% of budget use so far this year. And again, some things we're just paying in full right now, or expenses come up that we have to hit. So those numbers are a little bit off. Health and Human Services are actually showing a little bit of a positive balance right now, which is great. And Highway is as well. So nothing alarming to start the year. It looks like we're off to a good start for '26.
The biggest expenses we pay in January is we pay all of our partner organizations like Senior Resource Center, the libraries,
Transit.
and Hayward Lakes Bureau. So those are some of the big expenses. The other thing we do is we fully fund the employee HRAs in January right away. So that's an expense too.
Yeah. Questions? Next should be our January CIP purchases. We had a couple of items that we purchased that actually related back to our 2024 debt issue. They were part of that. Some hardware for IT and a bill related to the Axon body cameras that the sheriff has. Other than that, we did pick up a new Dodge Durango for sheriff and did some detailing on one of the zoning vehicles that came in. And who do we have next? Land records. So looking at land records for 2025, we throw a little bit of revenue in there because they do sell some maps and plats. Probably not nearly as much as there used to be in years past, especially with technology the way it is, but nonetheless, they do show a little bit of revenue there, brought in about $1,000. Expenses are a little less than anticipated for 2025, and that's because Rachel Thompson worked there and she moved over to Register of Deeds. And so that position was vacant for a while. And then of course with that comes some benefit changes depending on, health insurance elections and things like that. So they finished at 85% of expenses for 2025. Looking at 2026, their revenues are at 10% and expenses at 9%. So pretty much right on target of where we'd expect them to be. Questions? Next department we're looking at is surveyor. They generated a little more revenue in 25 than we had budgeted, and you will notice in 26, we made a little bit of an adjustment for that, kind of just looking at past year's activity to help us budget a little more accurately for what we expect them to have in activity. 88% of expenses for 2025. So they finished under budget as well, which is positive for us. Looking at 2026, they're 8% revenues, 8% expense. So right on the money of where we would anticipate them to be for the end of January. Next department for this month is zoning. Revenues for 25 finished at 130% of budget, so they were ahead of what we anticipated. And
How do they generate?
permit fees and that sort of thing. So land use permits, they do get some grant money, sanitary permits, all of those things go into zoning. And then for 2026, looking at zoning, we increased our revenues just slightly, based on activity and what we expect to see for them. Looking at their totals so far for January, they've got, that's 2025. They're at 8%, so, or excuse me, 6 and 7%. So they're sitting right where they should be. Nothing major to really note in that department. The next one on our list is forestry. One item I'll note in their revenues, the top line there is some state aid we get. It's a GNA grant. We're estimated to get about $39,000 for that grant, but the final report hasn't been completed and sent in for reimbursement yet. So I haven't booked that revenue as a receivable yet because I don't know what the exact total will be, but we will receive something there yet. So that will be forthcoming. Last year, it came in May. They finished at 99% of budget for expenses last year. And of course, their revenues were ahead. And then we talk about their revenue for stumpage, and that's in, we don't keep that in forestry's fund here that we're looking at, but that finished significantly ahead, but that hits the general fund budget in a different area.
We also had a sale of property that
Oh, yeah.
dumped into forestry. That's why they're so far ahead on their revenue. And that was, a community member approached Greg about a property swap, and our property was worth more than that one, so we got some money to boot. But it worked out better for us because it was a contiguous piece of property with our forestry as it was, so it worked out better for us as well.
Yeah, so them looking at 234% of revenues is reflective of that transaction. That was 117,000. And then for 26, they don't have any revenue coming in so far. Expenses are at 9%. So again, we figure around 8% the end of January, so they're sitting right about where they should be. Any questions on any of those departments?
Randy, I have a question just for the minutes. So the grant, and if you could tell me what that grant is again, and then stumpage are not reflected in that 234% revenue surplus, but the sale of the property is what?
The sale of the property is included. There's a GNA grant
Okay.
that forestry gets, and that total hasn't been arrived at yet, and the money hasn't been received.
Okay,
And then, yes, the stumpage total is collected in a different account, not right in the forestry budget item, line item.
thank you.
The next item is the December investment report. Interest rates on the CDs that we secured are all obviously at the 4% or greater. Everything else is now less than 4%. One item that I would like to note for you on the bottom is we had a CD with ampersand that matured in January, and the interest off that CD wasn't booked back to 25, so we booked that back in total. Generally, we book that out month to month, and so in 26, you'll see that income reflected every month as a interest total. But with that adjustment, if you scroll down, the total interest for 2025 that we earned was $1,008,986. And so while it is less than last year, it's not quite the dip that I think we anticipated seeing. So that's positive. And that's all I have for you unless you have any other questions. Thank you.
Is that you, Mike?
Yes, so I handed out to you as my past practice when it's new information, I want the committee to see it first, plus this also includes other county information. So I handed out this, it's not included in the packet. But what I did is we're looking at the sheriff and the clerk of court salaries for the next 4 years for 27, 28, 29, and 30. I used the same process as 2 years ago with the county clerk, the treasurer, and the ROD. So I looked at what I call our best comps, and you can see on the map there what they are, they're in blue. But what I take is the counties that are considered rural in our area and within positive or negative 30% of our population. So that gives us a group of about a dozen counties to look at. So then what I did from there is I took each of these position salaries from 26, and then I applied the same rate of increase that these counties all used in 24 for those other positions, and applied it to these two positions here to come up with a new anticipated pay for each of them. When you're looking at this, the only one who has approved the salaries for these two positions is Ashland. That's why they're in green. The rest of them are all calculations. The one caveat I want to give to this is different from 2 years ago with those other three positions. With clerk of court and sheriff, several, actually half to the majority of the counties gave a bump 4 years ago. So, you know, everybody kind of in the last 4 years has looked at these positions, figured we've all fallen behind market and comps to the other counties, so have given the increases. And so when you're looking at my sheet here, for the ones that gave large increases 4 years ago, I still applied the rate they gave 2 years ago to those other positions, which is likely going to be overstating what they're going to do. But they haven't announced what they've paid, they are paying yet, so I don't have that. That's just my intuitiveness, looking at the data, saying they're probably not going to do 18% increases again.
Is some of the, it sounds like some of the differential is attributed to timing? I mean,
It's timing.
everybody's doing it at different times, so we may be behind, but not as behind as it looks because it's a timing thing.
Potentially, yeah. Like, when I analyzed this 4 years ago, that really wasn't the case. Everybody did a big jump 2 years ago for those three positions. This time around, it looks like they had done this 4 years ago, then caught up those other three positions 2 years ago. We hadn't done that 4 years ago, so now we have to catch up now. So what I did for Sawyer County is I took the same rate we used 2 years ago for the three positions, applied them this year, and you can see where that would put us if everybody does that. Again, I don't anticipate everybody's gonna do the same percentage they did last time. And the reason you fall behind is, I think we gave a salary adjustment 4 years ago, but then I think the increase is 1% for the next 3 years. So then that falls behind what everybody else is doing. Now, when I look at the data, people are, you know, they might do a jump in the year one, and then they're trying to do like a 3% moving forward, which is what I've put in as well.
I thought when we voted on that previously for like the treasurer and the clerk, the elected officials, I thought that these two were included in
They
that
were
already.
not
They were
included,
not?
no.
What was the reason for that?
They weren't up. So
You had to do
the
it when they
statute
were
is
up
you
for
have to do it
election?
before the election.
Okay.
So that was 2 years away, so we didn't do it.
Okay.
I think we initially discussed doing them all at once and decided against it, and to
Okay.
wait until they
'Cause
were up.
Those two are new, so they wouldn't have been, or you're new to this
Correct, you guys are
committee.
new to this, yeah.
Yeah, you're new to the committee, so they wouldn't have been,
Yep,
that's why I was
so-
trying to,
When elected officials come up, we have to set their wage for the term of for the whole of the term that they're going to serve in. So with these two, they will be serving from 27 through 30. So what we're doing now, and we have to do it before the election goes out, before people have to declare for the election, we have to set the wages for those 4 years. So what I did, this sheet here, all the counties in blue, those are what I'm using for comps for this. I did that 2 years ago for their salary and ROD. So I'm doing the same process here and carrying over the percentage they increased, these counties increased for those positions to these two, which I'm anticipating is going to be high because I don't think all of these are going to correct as much as they did last time because they did a correction 4 years ago where they hadn't for those three positions 2 years ago. So, any questions?
I think I'm tracking,
My analytical mind is hard to relay information, yes.
all I really see is.
Sounds like you know what you're doing now. That's good.
it's like you have a degree or something.
Yeah, and the main thing I see is we're lower than most,
Yes,
we're all.
we're,
I would say if
Not
somebody's
all,
look
but most.
over needlessly priced, I would say. What's with Price County? My goodness, I guess that's not my business, but
well, they're one of the ones that had increased 4 years ago and one that I would anticipate not having as big of one this time around.
Do you feel that,
Higher ones have higher populations. It's higher.
The highest ones are on the high end of the comps I look at, yeah. Which is why I do what I do, so that you kind of get an average. Otherwise, you know, if I looked at ones that are very close to us, we'd have 4 or 5 comps.
to be fair, I mean, I don't think we're at a loss of talent because of it. I mean, more money is always better, I guess, if you're the individual, but
Yeah, you pay the position, not the person.
Right.
And we've typically had people who are long-termers. 3 years ago was a change. The three that we corrected 2 years ago are all new this year. That hasn't happened in a while. We know one of these is going to be new because the sheriff has declared he's not running again. So we do have to be at market or we will have a hard time recruiting talent. So there is a resolution in front of you that includes the amounts I've shown. So we would need a motion to move that forward.
I make a motion to move the resolution forward.
Motion by Stacy Hessel,
I'll second the motion.
second Mark Helwig. Any further discussion? All those in favor? Aye. Anybody opposed? Motion passes.
Thank you.
Thank you. Board appointed committee updates. Correspondence reports from conferences and meetings.
I just have a question that I meant to ask Brian, but we got moving along. When somebody doesn't pay their property taxes by the 31st of January, if they don't pay within 5 days, so I was researching Chapter 74. I had a call on it, and so, but my question to you is, when the interest starts to being applied for the time that they haven't paid the property taxes, who gets that interest? Does the state get the interest, or does the county? Or the township?
County,
The county does.
county, yeah, and the municipalities, all the townships. Because we settle in full in August, they do not get any of the interest and penalties.
Okay.
That's solely on the county.
So when the property owner does not pay their taxes, half of it at least by the 31st, then they're not eligible to pay the second half. Like, they're not eligible to split it up. They have to pay in full, correct?
We suggest they do. They do not have to pay their full balance. But the caveat is that the remaining balance,
Gets-
until they pay, they're paying interest and penalty.
Sure,
So yeah, they're not required to pay in full.
right. But it'll cost them more the longer that they
Exactly.
wait.
And
But
all
I-
the interest and penalties are all adjusted for the full month. So if you miss it at the end of the month, the next month is prorated to the end of the month right away.
Right. And then what do we get to use that interest for? Is that just go into your general budget? What do we get to use that as a county on the interest on if
Mike?
people don't pay?
It just goes into the general fund.
Okay, so, I gotcha, defer.
Yeah, I didn't know if that went as revenue or not.
It just goes into the general revenue, yeah.
That being said, too, going from 5 years to 3 years, consideration, we're not gonna be collecting as much interest and penalty as we were in the past.
Thank you. Any future agenda items? Meeting adjourned. Thanks, everyone.